Good day, and welcome to the Cello World Q4FY24 earnings conference call, hosted by ICICI Securities. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manoj Menon from ICICI Securities. Thank you, and over to you, Mr. Menon.
Hi, everyone. On behalf of ICICI Securities, it's our absolute pleasure and privilege, as always, to host the management of Cello World for the results conference call. Today, the management is represented by Mr. Pradeep Rathod, Chairman and Managing Director, Mr. Gaurav Rathod, Joint Managing Director, and Mr. Atul Parolia, CFO. Now, over to management for the opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, sir.
Yeah. Good morning, everyone, and a very warm welcome to our company's earnings call. Joining me is our CFO, Mr. Atul Parolia, and our Investor Relations Advisor, SGA. The results and presentations are available on the stock exchange and our website. I hope you had a chance to review them. This past year has been exceptional, characterized by our successful IPO to strong performance across all segments. Despite very sluggish demand in the consumer segment, we achieved 11% top-line growth and accelerated profitability. In Q4, we saw a 5% year-on-year rise in revenue and a remarkable 20% year-on-year growth in EBITDA. Driven by the promising demand in hydration, back-to-school and furniture segments, the establishment of a new Rajasthan facility will further strengthen the glassware business, setting the stage for robust growth over the next 2 years. Looking forward to FY25, we anticipate a growth of around 15 to 17%, fueled by all segments and the new plant. We expect EBITDA margins to remain steady at 24 to 26%. At Cello, our focus remains on surpassing industry growth and enhancing our position in consumer market. We are confident in the growth potential of a diverse portfolio, which aligns well with the trend. Hello? Hello?
Yes, sir. Please continue.
Yes, sorry. Which aligns well with our with the trend of premiumization of the product portfolio. Now I'll hand over to the CFO, Mr. Atul Parolia, for the financial highlights. Thank you very much.
Thank you, Pradeep, and good morning to everyone. In Q4 FY24, we achieved a revenue of 512 crore and EBITDA of rupees 140 crore with a healthy EBITDA margin of 27.3%. Looking at our full year financial performance, we generated a total revenue of 2,000 crore with over 66% coming from consumer wear, 17% from lighting instruments, and the remaining 17% from the molded furniture and allied products. We witnessed a 2.5% improvement in overall margin compared to financial year 23, driven by volume growth and product mix optimization, despite the decline in product pricing due to raw material cost. In terms of our channel mix, general trade contributed 77% of our sales, while export and online sales contributed approximately 10% and 8% respectively, with modern retail contributing the remaining 5%. Our gross profit stood at 1,052 crore with a margin of 52.6%. Consumer wear gross profit margin was 53.5%, lighting instrument margin was 58.8%, and molded furniture margin was 42.7%. EBITDA reached to 535 crore with a margin of 26.7%, reflecting healthy performance across all verticals. Profit after tax grew by 24% to rupees 333 crores with a margin of 16.6%. We maintain a healthy operating cash flow of 231 crore. With this, we are open session for question answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur from HDFC Life. Please go ahead.
Yeah, hi. Good morning, sir. Thanks for your time as always. I had a couple of questions. One, if you could just talk about, some of your key categories, right? So, bottles, lunch boxes, writing instruments, how, just trying to understand, even opalware, how have they done in FY24? How are you seeing trends right now? How's overall demand? So one was, of course, how's 24 been? And more importantly, how are you seeing demand right now in 25 as well? Yeah.
So opalware, we did a sale of around 342 crores, which includes a little bit of glass. The margins were pretty robust. It increased by almost 2% over the FY23.
Mm-hmm.
Writing instruments again has grown at a very healthy pace. The writing instruments, so we are always giving you a separate. If you see the stationery product, the sales was around 333, and if you see the EBITDA margins of EBITDA margin stationery is at around 29.3%, which earlier was 25.8%.
Okay.
So all the verticals, including furniture, the margins have gone up because the raw material was quite favorable last year. Mm-hmm. Mm-hmm. It is still not at the top, so we still expect the margins to stay at this level. Demand has picked up very well in March and April early, but I think so because of the ongoing elections, a little muted for some time. But I think so there should be a robust demand because as we are expecting a very good monsoon, what we have seen this time, and the rural demand has started picking up.
Okay.
Urban demand is still not at the top level what we expect. But I think so 15 to 17% revenue growth, what we have projected in most of the segments. Mm-hmm. Like furniture definitely would depend upon the price. So if you see last year also, out of the 11% growth, furniture was the least in contributing in sales. Because the raw material was at a favorable price, so we were almost passing 12 to 14% to the market. So that's why the volume was a little higher, but value did not reflect to that level.
Okay.
So even that furniture and given the price, in fact the volume growth in last year also in most of the segments would be around 15%. So we are projecting 15 to 17%. The glassware unit we are waiting once it starts now in firing. That could give us maybe an additional growth of around 3% this year. So our target is 15 to 17, but we could try and achieve around 20% growth.
Okay. And if you could also touch upon lunch boxes and bottles, the consumer wear category, how have they done in 24?
Yeah, so consumer wear back to school is now just started and they're doing very well.
Okay.
The second segment, what we are doing, all the bottles, because the heat is also very high and the bottle category is really doing very well. Both in even in glass, also the bottle categories are doing much better because the individual bottle system which has started in the last 4 years pre-COVID, from the COVID time, is at this category at a very big level.
Fair. And just one last one on this is, this whole BIS which has come up on steel bottles, right? Which essentially means that players, including yourself, would have to make these bottles in India versus imports. So, what are plans for us, in terms of
BIS is now extended till 4th June, and I think so it will get further extended on the import. Even on local, you have to take the BIS by September.
Yeah.
And the manufacturing of these are particularly vacuum bottles. All insulated bottles we are making within 100% in our own factory.
Okay.
But vacuum bottles are 90% imported.
Yeah.
Not only for Cello but everything.
Yeah. Yes. Mm-hmm.
So I think so there will be a window for a little larger period for people to set up the units and all.
Mm-hmm.
We have already taken BIS tender for our insulated bottles, what we manufacture for hydrants and all. We have already got the certificate for all our three companies. Okay. And all the other products like lunch carriers where we use steel and plastic together insulated, we have already taken the BIS certificate for that. So we have been given out. But I think Cello is the first company to get this BIS certificate on this.
Okay, so are we looking to incur additional capex also to start manufacturing the vacuum bottles? Is that also there in the plan?
Yeah. So it would not, because the capex is not very high. It's a little labor-oriented too, because if we take 5 to 10 lines also, the capex is around 30 crores, 30 to 35 crores. So that's why in our yearly capex, what we have drawn would be on the line of that. So it's not a major capex. So that's why we have not highlighted ever, because we were planning for last year itself to go in for some manufacturing. We did not want to manufacture fully because the price what we get from there, the quality and the SKUs, number of SKUs what we get from China, because they are manufacturing for the world. Yeah. So they have a lot of SKUs. They have a whole city or a whole district who manufactures this vacuum plant. Right. So there is a little hiccup, yes and no, how it will go, the trend over the next 1 year. There could be a little hiccup for some time, but I think so that should settle. We are very, very sure, because last time also they extended for 3 months, and now because of the election, nothing is happening. Right. So post the result, I think so, we have approached and we have already written to the whole of the industry has written. Right. So we expect that there would be an increase. And in fact, if at all the approval also happens on the companies, because BIS doesn't stop any import. BIS lays the standards. And the company from where you're getting the material has to be registered in the BIS. And they have to follow the norms and the quality specifications. Sure. So it has not happened, but it cannot be denied forever. It can be delayed. Right. Within all the categories like iron and whenever they put the mixers and BIS certificate, they always give the certification to the company which is manufacturing out of India, anywhere in India.
Okay, fair. And just one last one, if I may squeeze in, is on this, this proposal to raise money via QIP. Just trying to understand, if you can just give us more color, what is the purpose of this QIP? Where will you be using this money for? Thanks.
So see, one, there is a director's loan which is there from when we converted our companies into private limited. Other thing, that the bigger capex, what we see an opportunity in glass. Once we are just waiting to fire this for it. Yeah. Because the trend of glass is picking up very fast. So that is a capex-oriented business. So we want to be ready for any opportunity on that. So there wouldn't be too much of money which will be lying. It must be around 300 crores. So I think so there are opportunities. Medium scale companies, when we had come with the issue also, we have an opportunity of buying one of the consumer companies, which is very good in our segment itself. Okay. And which would add a lot of value on some product line. So these opportunities we want to be ready, and which are getting converted very fast. you will see over the next 1 or 2 quarters.
Fair. Got that. Okay, so great. Thank you so much and all the best. Yeah.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Yeah, hi sir, good morning. Can you talk about the export contribution of writing instrument business and how the export is going currently in FY24 and going ahead?
So export in writing instruments has grown very well. Even in other categories, if you see the combination of export, which was in 23, was 8% to our revenue, is now 10%. So writing instruments being the biggest segment in our export. Even opalware, we are doing good. Consumer wear also, non-glass also is increased in this year. So I think the export potential will definitely be, and export actually primarily grew more if you see in terms of rupee also, because the local market was more muted than the export.
Okay.
And in that also the general trade was a little more lower. So the export has grown at a level what we always thought, but is not grown up. Though you might see it outperformed in the overall growth, but it is at the same level what we expected.
Okay. How much you said the contribution of export in writing instrument?
So now the export contribution in the wholesale of our 2,000 crores is 10%. Last year it was 8%.
Okay. And about the Clino, how Clino has grown and how are we expanding this category also further?
Yes. So we are expanding in Clino, but Clino grew as all the consumer products was not a robust year for even Clino. So we grew at around 14% if we see in the category particularly, 14 to 15%.
Okay. And in FY24, we have 11.3% growth. So what is the total overall volume growth in FY24?
So, normally it is not measured, but whatever discounts we have passed on because of the raw material which was lower, on segment to segment if I see, if furniture it was around 12 to 14%, so if I have grown at 3%, so the volume growth will be around 15% on furniture. On other consumer wear, where we have grown 12%, plus 6 to 7%, so around 18% is the growth level on that segment. Writing instruments, the price point was not too much of difference, 1 or 2%. So we have grown around 17% in writing instruments, so which means around 19 to 20%.
So can we assume a 15-17% growth guidance you have given? There is a higher possibility will some couple of percentage or 3-4% kind of value growth will be there. So we can surpass 20% kind of growth if 15 to 17% we can assume volume growth this year for 25.
That's what I said in the earlier question also. Okay, we are targeting 15 to 17%, but if the glass once it starts and it adds better sales immediately, because the glass has to establish. Our main purpose is the glass always has to get established. Glass is not a big business which starts today and you can use it because the quality of glass establishes. Sometimes it can be a month more or less. So if as per targets what we are assuming, then we could grow at another 3% more. If the raw material prices go up and if we again correct our prices upward, then maybe the value growth also could go up. But we are assuming 15 to 17% of today's value of sales and today's pricing.
And sir, margin front, if more than 25%, 25.2%, can we assume with the glass plant opening and ramping up, we have a further margin expansion in FY25?
Yeah, so glass basically is a high margin product. That's what we had earlier also said. If the glass pool of our glass business, as it grows further, the percentage of margin would go up over the years. The first year, it might not because the EBITDA level, yes, definitely it will be good, but at PBT level, it might not affect too much in percentage, a higher percentage. But over the next 2 years, it will really enhance the profitability in percentage terms.
So any other business is going to drive margin in the FY25?
Sorry, couldn't get it?
So any other business, any vertical is going to have a margin expansion on overall company level?
So margin expansion, I think so we are at a very good margin level. So we are slowly trying to premiumize some of our product line in our consumer business. Like this year we have launched special categories for back to school children and water bottles and lunch carrier, where the margins are approximately on the normal bottles and what we have margin is around 7 to 8% more. So we are slowly trying to premiumize in that category. Even if you see in further our lunch carriers, casseroles, over the next 6 to 8 months, the range will be completely different. This will be a little more premium product. Okay. So though we will not stop too much of general product, but premiumization in this category is what we are looking for the next 1 year. Because this will make us completely different from the too many players which are there already in this field.
Thank you so much, sir.
Thank you. The next question is from the line of Percy from IIFL. Please go ahead.
Hi, sir. Just wanted to understand your ramp-up of the glassware. So I understand the capex you have done and the asset turnover, which is around 1.1, 1.2. I think the potential sales from that capex is around 250 crore. So do we get that immediately in FY25 or does it take time? And if it is the latter, if it is going to take time, how does it work? Because the plant has to work 24/7 continuously from day one. So does it mean that some of the production goes waste, or how does that happen? Can you just explain that part, please?
Yeah. So no, it doesn't go waste. Any glass plant in the world is like that. It's not that it's the first time. So we, as I said, we see in the COVID time also, we could run it and we could sell the product. And we were exhausted, so we put the second furnace. Whenever you add a furnace, you cannot exhaust in 1 year. That's why, because of the high capex, the margins are higher. If you see the return on investment on glassware business or plasticware, plastic general consumer product, the turnover ratio is completely different. The margins are less over here, but the turnover capex to revenue cycles are much higher. So we get around 6 to 7 times the revenue.
Right. So when do
we have this storing facility, and at times the spurt is very high. So it will take 1.5 years for us to achieve the capacity of the furnace. It cannot be in next 6 months, whatever I produce in day one, I'll be able to sell it.
Understood. So therefore, the glassware...
Then we would have projected at least 25% growth.
Got it, sir. So the glassware and opalware division, which you have done approximately 350 crore of sales this year, including a partial ramp-up of the new plant plus some increase in opalware, would around a 500 crore number be a good estimate for FY25?
I think our internal target was around 460 to 475.
Okay, got you, sir. Second question is that if I look at your consumer houseware, excluding the opalware and glassware division, what is the kind of growth that you are targeting for that in FY25?
So around 15%.
Okay. Yeah, that's it from me, sir. Thanks and all the best.
Thank you. The next question is from the line of Jay Doshi from Kotak. Please go ahead.
Yeah. Hi, thanks for the opportunity. I have only one question, and that is on receivables. So, if we look at FY24 versus FY23, incremental sales were about 200 crores and increase in receivables was about 145 crores. And I think there's an increase of about 17 days. So could you give us some color on, what is the channel inventory level and whether this receivable increase is largely pertaining to, the expansion of opalware capacity, or even in your other businesses, you're seeing higher channel level inventory and receivables? And how should we think about it going forward?
So see, our inventory levels has increased by around 2 days. About 87 days has come to 85 days. The receivables definitely has gone up. The general trade last whole year was not very okay. So we had given a little 10 to 15 days extra credit line to most of the customers to push in more to the retail. So whereby their receivables also got delayed. Going forward, and second was we have done some government tenders, which the money is coming in 4 to 5 months. I don't know. So that's one, and that's around in the range of around.
When you mentioned government tenders, does it mean CSD channel, Army Canteens channel, or is it something other?
It's not too late. No. Other than that, back to school, there are many channels in Assam and Rajasthan and Andhra Pradesh we did in Vimplats also for that thing. Mumbai Municipal Corporation.
Understood.
Okay. And so that is taking it up by 2 or 3 days.
Understood.
And other 10 to 15 days we have given extra to the channel. If you see a channel shift also, from last year 81%, which was general trade, has come down to 77%.
Right.
So general trade this year was really well done. Though I think so, with our product mix and everything, we could achieve higher growth sales than last year at a very good margin. That itself was there, and because of that, we did not want we suffer on sales. So we could pass on around 15 days more credit. I think so by September this year, we should be in line with what we were in 2023.
Understood. So then does it mean that there is, at the channel level, at distributor and retailer level, inventory level is higher than usual, and if that inventory level goes back to normalized levels by September, then there is a possibility that your primary sales could be a tad weaker than the retail offtakes or tertiary and consumer level sales?
Not 100%, because when I give, so he pushes my sale, only the retailer wants to pay at his time, because there are products where he has higher inventory. There are some imported products and all what the retailers keep. So there they get higher margins. So he wants to utilize your money sometimes. So our stock might have gone up at the retail end everywhere, not 100% sure. Yes, little bit could have gone up, because retailer has a limited space only. So you cannot store more.
Correct. So he uses your credit.
So he can increase by 5 to 10%, not more than that, any category.
So he uses your credit facility or limits perhaps to ease the pressure that he may be facing for some of our other products.
So there are higher margin products where they get it from importers, and where they want to pay early because they get a higher discount of 3 to 5% on cash discounts and all. And we thought this is an opportunity fine, we put in more so our product sells more. So if there are 10 units selling of any bottle, if I could sell 5 and 6, because it's not taking time, I sell 4. So we took a view that no, it's better we can give 10 to 15 days excess credit, and over the next 2 quarters we will get it down.
Understood. One or two quick bookkeeping questions. So with this fundraise, you will fully repay the promoter debt?
Yeah, almost. We could
about 350 crores, right? It's about 350 crores.
330 crores.
Understood. And over and above that, whatever you intend to raise will be, potential, requirement for organic or inorganic growth.
Yes.
Lastly, any updates?
Opportunities which I said, which I will not be able to disclose, but good level.
But I'm assuming this will be small ticket size, right? I mean.
So ticket size really doesn't matter, because the scaling up in that business is possible, and which is aligning with our portfolio.
Correct. Lastly, sure. Thank you so much. Lastly, any updates on consolidation or sort of, Vimplast or merger of Vimplast with Cello? essentially because there is unutilized cash on that book.
It is on the card and it will be very soon. Very, very soon.
Understood. Okay. Thank you so much, sir, and good luck for FY25.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah. Good morning, team. Thank you for the opportunity. Sir, if you could, like you gave numbers for FY24 in terms of volume growth and the value growth, can you help us with the same thing for fourth quarter?
Fourth quarter of 24 or 25?
Fourth quarter of 24, sir. Like 4Q20, you said about the FY24 volume growth will be so much for each of the segment. Similarly, if you can give for FY20, the fourth quarter.
So fourth quarter, the volume growth, if we see in our consumer wear, would be around 7-8%.
Okay.
In our writing instruments, around 11%.
Okay.
Furniture was around 18% to 20%.
Understood. So essentially what you're saying is that while it is 7-8% in the fourth quarter, the quarter was sluggish in terms of specifically GT, and that is seeing a pickup now in March, early April. Have I understood it right, sir?
January, February was very bad.
Okay, understood.
March, middle it started picking up, but it got a little down for the temporary period, I think so, because of the elections.
Understood. And the order what you said for the consumer business, right? It is for consumer wear business. The money which should come in 5 to 6 months. Have I understood right? And that has contributed about 2 to 3 days of extra receivable in terms of impact.
So the government supplies what is there, that is 2 to 3 days it has taken up because it's 5 to 6 months. Overall, 10 to 12 days we have extended credit extra in some of the product lines just to be there, which I explained in the last question. So these are the two things that were the receivables are high. The market was sluggish. We extended a little more extra credit because we could penetrate more in the retail. Thereby, it is not 100% that whatever we penetrated is still lying there. It could have got sold, but because of the payment leeway, he wants to pay at times which we have given 15 days extra, so they would not like to pay earlier, where they could invest in something else to make money, or if there is some payment, what they have to pay at the retail end.
Understood. Just one last question, if I may, sir. With respect to gross margins, which is gross profit divided by the sales, for these three segments, we see a sharp swing, in both directions for these individual segments. Is it possible to give us specific number for fourth quarter? What is the gross margin, and compare that with third quarter, and explain what has driven the swing, if there is any?
So gross margin for consumer is around 55.9% in this quarter. For writing instruments, it's 59.2%, and molded furniture is around 37.7%. And for the year, it is consumer wear is around 53.5%, writing instruments 58.8%, and molded furniture is 42.6%.
Right. So, for the fourth quarter, what is the swing from third quarter, sir? From third quarter to fourth quarter, is there a large swing? Because I think third quarter we had consumer wear at around 52%, while it seems to have gone up to 55.9%. Yeah.
And molded furniture was 42.8%.
Yeah. So
molded furniture has gone a little down. The reason being, because of the little raw material which has gone up, because it was raw material was at a very lowest level in that quarter. Writing instruments is for 5 at the same level almost. It's only 0.5% difference. Consumer wear, because of the bottle season, hydrant, where the gross margins are much higher, because that's why it always goes up. Last quarter, over the last 3-4 years also, you see the March quarter, January, February, March, the profit margins are always higher.
Understood. That's about it from my end. So thank you so much.
Thank you. The next question is from the line of Vaidik from Monarch Network Capital Limited. Please go ahead.
Hi, sir. Congratulations on good set of numbers. So my first question is towards the opalware division. Firstly, I would like to know the capacity utilization levels, and going ahead, do we see any possible capex for the opalware division as well? And also, the margin.
Last year we consumed around 65%, 60 to 65%, and this year will be at around 80%.
80% in FY24.
FY24. No, FY24.
Okay.
Because last year we started in August, September, the furnace, second furnace. So whereby we increased our capacity by 40% more. So if we were making around 12,000 tons, now we are at 20,000 tons.
Okay.
So under 20,000 tons, this last year we utilized, if you see the capacity of 20,000 tons, we utilized around 65%. This year it will utilize around 80 to 82%.
Okay. And sir, what about margins in this division?
So margins are in line and a little better than last year because of the new furnace is getting added. If you see, the sales grew by around 24% in this segment. Margin, EBITDA at around 28. No, this one.
Okay.
So it's around 28% what we maintained is a little a percentage higher.
28%.
So at last year the PBT was around 28%. This year it is around 32%.
Okay. And sir, do we see any capex for this division?
Capex
for opalware, when we reach 80%.
Opalware, we are not expecting any further capex for next 1.5 years. Because we still have capacity whereby we utilize it.
Okay, sir. That's it from my side.
Thank you. The next question is from the line of Keyur Pandya from ICICI. Please go ahead.
Hello.
Hello.
Yes, Keyur.
Hello. Okay. The question is, first question is on the import. So from the overall sales, what percentage of raw material or traded goods is imported, and it pertains to which subcategories?
So there's only one category which is major, is stainless steel vacuum flask, which contributes, I think, to our total import to around 80%. What we import and sell.
And that category is around what percentage of overall sales? Probably.
It should be around 12% on the consolidated level.
Okay, understood. Second, on the glassware, so there is no import on the glassware side from our side?
Yeah, for the time being, before we start the furnace, so that's why we build up to an extent. And the similar category now will start manufacturing in India. So that will get, the import will get converted into manufacturing locally.
Okay, so I mean, in that context, what kind of growth do you expect for the glassware specific? Why I'm asking is that, we have added the capacity that is from the supply side. So it will be more of substitution of domestic manufacturing from import, or there will be actual growth of sales, and to what extent the growth is expected?
Because that what we are doing is only 40, 45, 50 crores, which the furnace capacity and the manufacturing capacity will be 250 crores. So this will get converted immediately, plus the incremental sales what we get in this year. And by next year, 1.5 years, we will be able to grow that up to 250 crores of sales.
Okay, understood. Noted. Thanks a lot and all the very best.
Thank you. The next question is from the line of Grishma Shah from Envision Capital. Please go ahead.
Yeah, good morning, sir, and thank you for my question. Want to understand writing instruments, what kind of distribution expansion plans do we have for next year?
So we have expanded already some distribution every year ongoing, like last year also we had said. So on a yearly basis, if you see in writing instruments, the number of distributors have gone up by around 350.
Okay.
Over the last year.
Correct. This retail network was at around 55,000 outlets, if I'm not wrong, and this is at around 65,000 at the end of the year. So is the idea more to penetrate deeper into these outlets, or you would see the numbers increasing?
No, numbers will definitely increase. See, the numbers, once it gets converted, there are numbers which are not service counters. There are numbers which are service counter. Only the service counter numbers we get it.
Correct.
Which are not service and which is supplied through wholesale. Because there are more places which the service is not possible. So that counters are there, but penetration is one, and increase in distribution and increase in retail will definitely have to go on hand to hand. It's not just that we will increase sales only in this counter. There are a lot of counters. As I said, for a writing instrument to be really there fully, you have to reach 150,000 counters.
Okay. And the other question is on the raw material price trends. You already highlighted, but is it fair to understand that now we don't have any lower price raw material inventory in our system?
Lower price inventory?
Yeah, of raw materials.
No, so raw material we are normally keeping only a month. So
okay.
Normally it is in line, because raw materials it can go down very fast, and so we don't want to play too much on raw material unless and until we have a very good chart where we see a difference of around more than 10%. We always scale up our inventory. Otherwise it is maximum a month. So cannot be that we have a lot of raw material which is at lower price.
Okay. And with this QIP that we are planning, one is obviously the debt comes off, and some amount of capex that we need. Apart from that, are there any other new product categories that we intend to penetrate?
So we are thinking there are some opportunities where we can acquire a couple of companies. That's why we think it's not very big, like it will be on a medium note or smaller note of purchase. But I think that's why also we want to be ready, because the opportunities are there and it's coming very fast in two of our segments. So we want to be ready to utilize this fund over there.
Okay. And is there any, deadline that we set for the QIP, or is just?
I couldn't get it, sir.
So is there a deadline that you are working with the QIP?
Yeah, we are working almost next month.
Okay. Fine. Thank you and good luck.
Thank you. The next question is from the line of Akhil Parekh from B&K Securities. Please go ahead.
Thanks for the opportunity.
My first question is on the sales guidance, right? If I look at third quarter of last FY24, we have maintained that we will do a 20% plus kind of a sales growth in FY25, and I believe now we are saying 15 to 17%, so it's slightly lowering of sales guidance vis-a-vis what we mentioned in last quarter. So is it to do mainly because of election-led disruptions, or has it anything to do with the higher level of inventory in the channel? That's my first question.
No, so I will still tell you that the price point has not been had the comparison from FY21-22 when the raw material was at its peak. Okay, and 23 onwards it came down. Last year it was at a very good level. So as I said, 5 to 6% sale looks muted because of when it is compared year on year. Okay, and still we have not gone up to the price what we were. The raw material still sits at around middle of around the peak and the lowest. So still the price point is around 3 to 4% less. That is one. 15 to 17% is value growth.
Okay.
Volume growth 2 to 3% higher. Even as I said, the gas prices in opalware has come down from 120 rupees in starting of last year 23-24 to around 55 rupees now. So it's a very, very big difference, around 8 rupees a kg on our conversion.
Sorry, can you please repeat the last piece on the opalware, what you say?
So even in opalware, the raw material is not a very big cost, right? The opalware raw material is around 15 rupees, the basic raw material. When the silica and borosilicate, all the products what we mix in. But our major is energy. So if we see the energy cost is 2 times more than the raw material.
Okay.
So energy cost has reduced drastically, which has given us around 8 rupees kg lower costing.
Got it. Okay.
So which definitely we cannot retain everything, so we have passed on. So the value growth over there also looks muted.
Sure.
If this trend is there, then I think so our sales price, which was 100 rupees, is now at 95.
Okay.
So because of the vast diversification, we are only relating most of for your guidance that our raw material is not one. Our raw materials are different because we are into 3 different segments. Where the writing instruments, the plastic would not affect us too much. Neither on both the sides, putting up the price or lowering the price. In opalware, the energy cost will definitely make a big impact on lowering the price or increasing the price.
Okay.
On our other plastic consumer, yes, definitely plastic is the major raw material and the second raw material is stainless steel. So these are the 2 basic raw materials in our other segments. So in the mix of it, I still feel we are at 5% lower than of the pricing as where we had sold in around 20 to 23.
Got it. This is clear. So, 2 more questions. One is our channel checks were indicating that Milton is probably planning to enter into opalware category. If you can give any color on this.
I'm not sure.
Okay. And lastly, on the government tender side, if you could quantify how much the sales was?
No, sales was this much only. 18 crores.
Okay. Sure, this is helpful. Thanks a lot.
Thank you. The next question is from the line of Prathamesh Dahake from Motilal Oswal. Please go ahead.
Good morning, sir.
Good morning.
Good morning. So due to connectivity issues, I wasn't able to join the call. So I had a couple of issues firstly related to the writing instrument. What was the contribution of exports in value terms in FY23 and 24? Could you please let us know in the writing instrument?
Only export you mean, is that?
Yeah, exports in writing instrument.
Export would be around in terms of 40 to 42%.
Sorry, Sorry, sir, you were not audible. Could you please repeat?
Export would be 40 to 42% of the
40 to 42%. Okay. And last year it was?
It was a little higher by around 45%. 45, 46. I'm not sure exactly, but that should be the figure. A percentage plus or minus.
Okay. So, and if we were to look at both the markets, domestic as well as exports, what was the revenue breakup in terms of value and volume for writing instrument in FY24?
The volume and value, we have never worked on writing instruments. The number of pieces is not possible.
So, I mean...
So, I don't have it ready now.
Okay. Okay, sir, like you've mentioned that RM prices cooling down has been one of the reasons for elevated margins. But I guess your EBITDA margin in writing instrument is much higher when compared to other players. Is it due to the product mix? What is the average price point that you're playing in the writing instruments? If you could let us know.
All price points are there. We are not there in only 5 rupees category. We are from 10 rupees and above. Otherwise, all price points, we are also there.
Okay. So, main reason behind such high gross margins would be, apart from RM cooling down?
I think why it is lower at the other level, that I really need to check there. It has been historically there when we were manufacturing even in Cello. That time also we were almost 1.5 to 2 times the margin of the other players. So I don't know really. Okay. I think we still feel that we are not at the top level of manufacturing.
Okay, sir. And how do you see the market shaping up domestically and in domestic as well as exports for writing instruments in the next 3 to 4 years?
Instruments will grow at for next 2-3 years around 12 to 15%.
Okay.
Additionally, allied products with writing instruments like masters and all are growing also at a healthy pace.
Okay.
And consolidation will definitely happen in the Indian market. The smaller players and all will be a little difficult for them to survive over the next 2-3 years.
Oh, okay, sir. My next question was, how much did bottles contribute in FY24 in value terms, if you could help us understand?
I don't have it separate.
Sorry?
I don't have it separate with me.
Oh, okay, sir. And generally, what gross margins do we make in the bottle segment, steel as well as PET?
So there are different, because we have high margin ones also, we have the lowest margin also. In one of the bottles, we have only around 17 to 18% EBITDA level. Some of them are at 30% also.
But if we were to say on a basket level, let's say PET versus steel, there has been so much talk about it. So how are you looking at it in terms of, let's say, gross margin at a basket level or a consolidated product level?
See, how the consumer wear is a basket. So every segment, we really do not go and focus on this. Yes, we have to, where the demand will grow, that is what we try to escalate in our total basket. When I project a sale, I have my projections here. Maybe my casserole category will grow by 8% this year. My bottle category will grow by 15%. But we do not have every product different margins and on every category. So there are almost 24 categories of product lines. So we have a bucket we have mask, we have washing laundry basket. So every segment has an end user different. So on this basis, we never have thought of getting what is the margin, then what is the margin in casseroles, what is the margin in lunch carriers. So we don't have that separate segment-wise thing.
Okay, sir. That's all from my side. Thank you so much.
A little more, if at all, in next quarter I try to give it, will be much more better for the competitors than for our use in any case.
Okay. Understood. That's all from my side, sir.
Thank you. The next follow-up question is from the line of Keyur Pandya from ICICI. Please go ahead.
Thank you for the opportunity again. Just 2 questions. First, regarding this BIS standards. So, do we expect any interim disruption into sales? That is first. And second, whenever industry would require BIS, standards for their sales, in case of Cello, so we would continue to import with vendors getting registered, or we'll have our own facility or some domestic vendors. How will we replace this?
Disruption will happen, definitely. There is an opportunity also in this, and for sometimes even our companies could get affected. But overall, I think so it will be an advantage over the long term with the BIS coming in. Manufacturing, we have already started thinking on it, and we have taken steps here, how far. But it will be always, if we manufacture also, we will be manufacturing only to be able to manufacture around 20-30% of the SKUs in India. 70% still will be on import side. Value might be 50-50 over the next 2-3 years, but import definitely, you cannot make 100 SKUs with the size of sales you have. Because it will not be affordable. The cost would be much higher than what we are importing today. Till today, all the manufacturers in India are not being able to manufacture at the cost where we import from China. The quality also is, till today, is much better from China than India. So this will in future also remain an import and local both. It will get a combination. What today is 90% import, it might come to around 40%, 50% import, 50% local.
Understood. Noted. Sir, thanks a lot and all the very best. Thank you.
Thank you. The next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. So, firstly, on the fundraise, can you quantify what kind of amount we are looking at? Would it be, let's say, 500 crores, 1,000 crores, any broad range?
So, can I say the number? No, so the board will decide, but I think so whether, I don't know, I'm really not sure whether I can speak on this.
Okay, got it. Secondly, on the thought process of fundraise, so I mean, we had our IPO just a year back, and at that time we didn't raise any money. So what has changed in just 1 year that we are now going for a fundraise?
See, 6 months back we were not a listed company. So we were running our own company, and now really we want to grow and outgrow what we... So wherever we were exploring opportunities, when we were in the process of putting this glass plant, at that time we thought what is the capacity we are producing and what would be the market over the next 2-3 years. If I would have been an unlisted company, I think I would not have thought for the second plant for 2-3 years. Then we'll see. Though we are now in there, so all the opportunities, even our plastic chemical, as I said earlier, I have some opportunities where we can do. Okay. Where we are in the process, we are in talk with them, and which can happen and which can really add value to the company. So these are the opportunities we try to explore only post-issue. Though it was there in the mind, but as an unlisted company, I would not have tried to acquire any company. Because I would have tried to grow my own business at the pace what I wanted to grow. But now, if there are opportunities and you are in the listed space, you want to outperform, you want to grow much faster. So that's why instead of this, and at a compulsion that at a later date I have to do an OFS to bring it down to 75%. Because the promoter holding is at 78.06% today. So we thought it is better to take money in the company, where we have a larger opportunity to grow, and so if we have the money, I think the acquisition will be much faster.
Got it. That was helpful. Thank you.
Thank you.